What is the show? Trading Buddies. It's Thursday, long week, so please do excuse. I've had an interesting week, not about trading, but various other things to do with my business, of course. But let's talk trading, because that's why we're here. And we'll start with gold, shall we? As we always do. I'll pick a chart. That would be the hourly. Actually, gold's right on my not watch list, tip of my tongue. That's the word I'm looking for, because it's really at an interesting point, isn't it always? I've lost my control panel, which is why I'm fumbling around here. Where's it gone? I hate this. That's not that. There you go. Righto. Gold, 1 hour chart. Going okay this. Yesterday, I didn't trade it yesterday, but it looks as though it went, or did it? Hope that was a 9 o'clock bar. It wasn't. So you would have got short. Hopefully took your profit at support and didn't get caught up in that big rally. On the hourly chart, went to a new high and then came back off. Today we're in a nice little tight range. I don't mind that. Like the fact that we're in the middle of it as well. So let's isolate our range, which is there. And there. So we've got a high at 1924.33. We'll call that 1925. And a low at 1907.54. We'll call that 1907, shall we? With a couple of minutes to go, we will look to trade that breakout today. My word, we will. Not exactly a replica of last week, which was a very, very good week for this breakout scenario. But hopefully we'll get another one today. See how that goes. Quick update on the trades that I'm in, I suppose. Gold is not one of them, but the NASDAQ is. Sadly, we're in maximum, well, not maximum up here, but a big drawdown at the moment. I was playing a short to get long here, actually. Maybe I should have just waited to get long, huh? But we'll see. If we can get back underneath here, then we've still got a chance. Euro yen, we took profit on euro yen overnight with this very big bar. That took us into the false break and, of course, the double cross on the monthly pivot. It was exactly the same on dollar yen, but we're safe on both stops. Sorry, not on dollar yen, we're not safe. Stops to entry on euro yen, euro pound, which we've been in for a little bit. Pretty much the same thing. Again, a false break, TP1 achieved, stop loss at entry. And the other one that's still at risk, there's the entry there. Actually, we got slipped a bit, entries about there somewhere. So we're hovering around entry. This double bottom does not please me, I must say. But I'll hang around here. If we get to close above the pivots, I'll close this. You could also look at this as looking for a higher low, and if that's the case, I'd probably switch allegiances. But so far, so good. Euro yen, euro pound, both trading for free. Dollar yen still at risk, and NASDAQ not so flash. Righto, back to gold. I suspect we'll have a little conversation about this, Ash and I, about gold today, because, as I say, it's on the verge, gold, of going binary, in my humble opinion. A lot of stuff happening around the world, not least of which the banks, man, what's going on there? Right, let's place it. 1925, I think, was the buy. And let's go with that, 1925. Stop loss was 1907, if my memory serves me correctly. And as you know, I remind the elephant, so it'll be spot on. Just kidding. Take profits. Well, we could use the highs or we could use DR1. I think we use the highs, which will be, let's just use the close of that one, 1934, let's say. That will be take profit for the long. Should it trigger? Now the short, which would be the reverse of that, of course. Oh, it was already there. 1907. Uh, 1925 for the stop loss. And take profit. Well, it's the same, isn't it? DS1 or the lows, we go for DS1, which is, let's say, 1888, just because it rattles off the tongue pretty well. 1888. There we go. Ooh. Ooh. Buy stop. Should be sell stop, of course. 1907, 1925, 1888. There we go. That's the long and short of it. Pardon my pun. But yeah, I think it's in a good position today. We'll see how it pans out. Now, as far as gold is concerned, from a trading point of view, outside of that breakout, interesting bar yesterday, one would have to say, and I'll get more from Ash on this when he comes in. But this banking situation that we spoke about on Monday, and of course has been bubbling along for some time, appears to have legs. And we've seen, well, the indices like the FTSE have that's weekly, sorry. But you can see the FTSE has had a very, very paltry, I should say, week or so. The Aussie didn't have a great day today. Again, same sort of story. The S&P 500, a little bit more resilient than the others, one would say. No idea how to play this from a fundamental point of view, this banking situation. They're talking contagion. We've also had that Swiss or Credit Suisse, not default, but they can't get bailed out by their benefactor, which of course is Saudi Arabian Bank. All very interesting. What it means, can't wait to talk to Ash about that if we can take a position on it. But it seems that everything's going backwards, and that's why I'm really interested in gold, because if you consider that the world is now in shaky ground, you would also consider that the recent momentum behind gold should push it to the high here to test that, and if not, go through it. I think once it does go through it, 2000s kind of just going to say goodbye to 2000. But are we there yet, in the famous words of children in the backseat of the car all over the world? I don't know. I really don't know. I can't read this fundamental situation very well. I take on board that, we've been in similar circumstances in 2008, but it's not the same. Not the same circumstances. Is it the same result? Is the question that, of course, everyone's asking at the moment. And look, things do look similar. Gold. I was looking at an analysis on gold there this afternoon that my good mate Phil showed me, and I'll share that with you a little bit later. But it shows that we've been in this technical scenario well before, in a couple of times between 2001, 2009 in particular, and the chart showing very, very similar circumstances that it did at that point. So I guess that's going to be a topic of conversation, not just gold and silver, but the indices in general. And they do seem to be on a downward track. Ash, what's going on, mate? Can we
Well,
rely
they
on them?
do. Yeah. So this whole sort of story is about really it was sparked from the Silicon Valley Bank over the weekend, which we know we you know that started to be calmed down because the Fed stepped in and they effectively ensured enough liquidity to make sure that the banking sector wouldn't get contagion. But then yesterday we got the story that's the Swiss National Bank, Credit Suisse, was finding financial conditions very, very difficult, and effectively, because of the fact. So what's happened? Just to give you some context, is that because of the regulations that happened after 2008. So what we had in 2008 was obviously the banking crisis, and regulations came in to make sure that assets that were held were safer assets. And obviously, a safe asset for a national bank is a treasury, so government debt, effectively. But the problem was that they bought the government debt at a price that was quite high when throughout the years, and then over the last 12 months, government debt has got a lot cheaper as yields have gone higher. Then you get this bank run where depositors come in and say, look, we need our money. And the only way they can really get the money is if they sell some of the assets. And those assets have devalued so significantly because of yields going higher and the treasuries coming down, that that they were losing, lots and lots of money, due to it. So it was a fear that this contagion would sweep the market, because while the regulators try to make banks a lot safer, what they ended up doing was making them really actually a lot more dangerous in some respects, or at least as dangerous, because they've been forced to hold these specific assets, and they're not as safe, evidently, as they initially thought they were. So Credit Suisse came out and said that they were having trouble financially, and their parent company, the Saudi bank, I don't know if it's the Saudi National Bank, but there's the Saudi Corporation Bank or whatever. They said that they weren't going to give them any more money. They weren't going to sort of make sure that they were secured and effectively buy more stock. And that sent shockwaves through the market, because Credit Suisse is the second biggest bank in Switzerland. Now the S&B have come out now, the Swiss National Bank have come out and said that they will insure Credit Suisse's position. So there's no major panic from that position now. And also we've got this situation where we've got a potential ECB rate hike coming in today that was thought to be 0.5%, so 50 basis points. But now the speculation is that is more likely to be 25 basis points. Now there's argument going on really today. Will that be a 25 basis point rate hike? Will it be a 50 basis point rate hike? And that rate hike will determine really where we go, probably from here. Yes, the contagion aspect is a factor, but it's also really now down to whether the ECB think it's sufficient to say, actually, what we are doing and what central banks across the globe are doing is really putting the whole structure at risk, which we knew would happen. The Fed have said that there's a large likelihood that there will be a recession, but will they now come out and say, actually, the risk of recession is so great it's actually now superseded the risk of inflation? Or will they say we're staying on path? And that is now the argument going on in the market. If you believe that they are about to halt interest rates, then of course risk assets become very attractive and people go out and buy them, which I've just taken a trade in the FTSE long, just on the back of that. I'm looking for some FTSE upside today, because I think that there could well be at least some assumption up until that ECB meeting that we could actually get a 25 basis point rate hike instead of a 50. Now, if they do that, that would suggest the Fed are about to do the same. And either way, it suggests the Fed are about to do the same anyway. We saw inflation numbers come down a little bit in the CPI data on Tuesday, but quite a big drop yesterday in PPI. So it looks like there might well be enough to suggest that the Fed feel like what they have done so far is at least having an effect, and it might be worth at least pausing just while we sort out the situation of the financial conditions. Now, of course, if we're thinking about trade ideas, number one, that's the FTSE for me. The Nasdaq was a decent trade yesterday, but that's really gone. But some of these these European stocks now become very attractive. FTSE 100, DAX, things like that. And then on the flip of that, you've got the euro, which to my mind would suggest that the euro could well weaken if people have been pricing in a 50 basis point rate hike, because Christine Lagarde basically said that it's going to have to take something extreme for us to change tact. Well, we've just had something extreme. So, does she change tact? And if she does, that puts the euro in a very weak position today. I quite like it against the Aussie, and I have taken a trade in the Aussie. I'm quite happy to show you the trades when you're ready. But
yeah, I've ready. Show us the trades. There's a few things I want to talk about regarding this banking thing. Is it under control? What happens if we see others? Because we were here in 2008, 2009, where the Fed did bail out some, but not all. And in fact, they were very choosy, as I recall. So I don't know. Is one bailout enough? I don't know. I've got no idea. It may be on my pay grade. But.
Probably not, and it's going to depend on what central bank action is going to be from here. Now, I've taken a trade on the FTSE long. It's a little bit high. I would have preferred some sort of retracement, and I might just scale into this one. But I think the market is probably pretty keen this morning. I think we could actually see some decent upside. A better place to try and get in would be along this trend line. So if it manages to come back, and there's enough time, then I'll add to the position here. Particularly if we manage to get a close above this area here. This is a better price already, but I quite like the FTSE for some upside. But you could go around the grounds, and you could look at the CAC and the DAX are probably better in some respects because they've also come down a lot. And the one thing about the DAX and the CAC is that they are going to benefit if the ECB do come out and say that that they are not going to raise interest rates, or quite as high. So these are also sort of valid positions, I think, to be taken in. But I like the FTSE, and I'll add to positions in the FTSE if it does start to fall. The euro, I've taken a trade euro Aussie short. Really, because I quite like the Aussie. My stops are currently up here, but I don't want to see this break above this level.
I don't want to today too from the Aussie.
Yeah, exactly, mate. I mean, the Aussie looks okay, doesn't it? I mean, the Australian economy isn't too bad at all. So I think it's relevant. I think it's valid, and of course, targets do actually see us coming down. Probably to test this area down here, probably where the monthly pivot is, would be a genuine target. Now, if I'm going to get down there, I'm going to have to trail the stop. But I don't think just putting a target down there and hoping for the best would be too wise. But I wouldn't mind a little bit of a stop trailing. You can see that there's a lower low here on the 4-hour. Looks like this may well be the retest bar. So that's why I've got my stops up there. But if you look at it on the hourly as well, double bottom here is a little bit problematic. So there could be, and this is where the argument's really starting to come into play. Could even argue that this is a higher low here, but there's also a lower high. So I think that this is a fair one to try and go for. Looking on the 15, as I say, I don't want to see this going above these levels on the 15. If it gets above this level and closes up there, probably significantly, maybe not, maybe it's there. Then I don't really want to be in this trade, and I'll probably cut this position relatively early, just because I think that if the argument is going to be won by the bulls, they're going to quite happy to really take charge of this. But if it's going to be won by the bears, then it's going to be the same situation, and I don't see why that they would be flitting around this area. A close up here would suggest that there is an argument. What I'm looking for is something decisive. I'm looking for really the bears to come out and say, no, this is definitely not going up today. We're not going to get a 50 basis point rate hike. It's 25, so we're selling off. Closing up here really starts to kind of stress that theory. So I'm not going to stick around in this one too long, mate. If it doesn't really kind of help me out early doors, then I'll be closing the position.
Well, I can't expose myself any more to the euro short than I am. I'm euro pound short. I'm euro yen short.
Oh yeah.
Both trading for free, I'm pleased to say, as we come into that news event. So
that's really good.
Looking for a happy ride myself, and could do with one, I've got to say. It hasn't been a great week or a couple of weeks for me, actually. So I could do with a couple of good ones.
That's really good, mate. And actually, that's going to be the key here, I think. If you can get free trades in the market, before the meeting, and the meeting helps you out, then you're going to be in great shape, and that's the bottom line, isn't it?
It's my target before news every time if I can find a way in.
Which I guess is going to be one of my things here, which is why I'm not, and I don't mind fluctuations. This is going to be a bit volatile. I don't mind this kind of even spiking, but as long as it closes down here, really in the next 15 minutes, so I've got a little while to wait and maybe just kind of go through a little bit of fluctuation. But if this does give us something decisive, if I can end up down here before news, which is kind of looking a bit unlikely, but if it does do that, then I will do the same thing and I'll make this free. And I won't mess about. If it's in this area, during just before news, then I might have to close the position. I mean, I think it's going to be important really to trade this correctly and not worry about the money in, but really try and protect the money going out. But we will see how that transpires, mate.
Interesting. Yeah, they're the only trades you're interested in at the moment.
Yeah, I think the indices and the equities look good to me. The Nasdaq is definitely another one that is of interest, because I see the Nasdaq as giving me an inverted head and shoulders. Really good position yesterday, and I took a little bite out of this, but I didn't stay with it, and I wish I had done now, because there was a position down here that was really good, and that's just taken off. It's broken through this level now as well. So Nasdaq coming back. Look at those pivots stacked up. Comes back to this position here and gives us a buy signal. Then the Nasdaq also looks good, but I do think that this is going to be dependent really on the confidence really with the market. Is the contagion actually a problem or not? I can tell you that this morning the FTSE 100 has opened up relatively positively, and if you look around the grounds, then the likes of Shell and BP, well, BP is actually up over 1%. Shell's around about flat. AstraZeneca's around about flat, but it's HSBC which I think is the telling stock, up 2%, and that's just been plummeting. HSBC did take the arm of the Silicon Valley Bank in the UK. So if they can do okay, I mean, this is the biggest banking stock in the UK, and this is one of the things about the UK and the FTSE, is it's very dependent on financials for it to do well, and this is one of the reasons I'm edging towards it. If this story does end up being quite positive and turning around effectively, and we don't get the contagion that people feared yesterday, and it flips around again, then the FTSE should probably do okay today. Because because of its exposure to financials. Nasdaq less so. The Nasdaq in many respects, if you look at what's happened to this chart and you compare it to what's happened to this chart, it's basically done the exact opposite. So the Nasdaq is really, it was a great hedge trade. It's done really well right across the board. There's the CAC on. There's the China stocks 50, all of them down. Even the S&P has struggled. The
Struggled,
Dow
but
Jones.
it's kind of holding ground, isn't it? Really,
What's that? The Nasdaq.
the S&P.
Now, so S&P's holding ground, but it has come down. I suppose that's the point. From this point here, which was the start of the month, the 7th of March, it's come down. If you compare the same thing to the Nasdaq, the 7th of March actually has been completely the opposite direction. That's the 7th of March there. So not completely the opposite direction, to be fair, but it's flat. You know, the Nasdaq.
Yeah, I was
is
actually
flat.
looking for a bigger pullback on that before it went long, actually, and
Yeah.
I'm in a trade short, so I'm not at the best of circumstances with the Nasdaq at the moment.
Yeah.
I can see, and we spoke about this on Monday. It looks a bit like the sentiment cycle to me, and if that's the case, I was looking for an aversion point. Now, I didn't really see it. So that's why I was happy to trade it short, and it's set up for me as a game changer bar. That's why I only traded at a small risk, but it doesn't look good from a short point of view, I've got to say.
No, not right now,
So
mate.
I'd
Really,
agree.
the Nasdaq expresses risk better than any other index, and I think this is why it's quite interesting when you're sort of seeing everything else tank. Normally, you'd see just everything just plummet. But while you're seeing everything else tank, the Nasdaq's held its ground really, really well. You know, suggesting that I mean, this one probably suggests more than others as well, where the Fed may well go. And as I say, you know, yesterday's PPI numbers did suggest that producers are paying less for products, and if that then gets passed
About
on to the
time.
consumer, then that's a good thing. Incidentally, Bitcoin up nearly $25,000, so that's had a 14% rally over the last week. Some of the other cryptos haven't done so well, but Bitcoin is an interesting dynamic here, because it does, again, it's another thing that does express risk very, very nicely. And we are in a situation where the SEC are going after many of these crypto projects, saying that they are a security. But the one thing that they've stated isn't a security is Bitcoin. And when we start looking around at where people are going to be putting their money, just to kind of get some safety, then it looks like Bitcoin's still quite a popular option, as is gold, of course. And we've just seen gold just rip to the upside with all this stuff going on. Gold hit all-time highs against the pound yesterday.
Oh, did it?
When we look at this,
okay.
Look at that. It's just gone and gone and gone. So against the pound, there was the previous high there. This is the previous high there. Yeah. So it's been hitting all-time highs now for a while. But this hit 1,600 pounds yesterday, and that is all-time highs for gold. So we're seeing some of those safe havens, if you like, if you consider Bitcoin to be the same thing. We're seeing those safe havens do pretty well in this environment as well. So an interesting market, mate, where you see some real split of investor sentiment on things like the Nasdaq and Bitcoin and gold, and between that and other risk assets like the FTSE and the DAX and the CAC and the Hang Seng 50 and stuff like that.
Well, while we're talking about gold, can you go to the gold dollar chart? And I was listening to an analyst today who pointed out something very interesting. And that gold pound chart looks also very similar to what I'm about to show you. If you go to the monthly chart, which you're on, which is cool, and go to, I think it was 2009, maybe 2010.
This here?
There. You can see, October 2008, if you've got it on your chart.
October 2008 is...
There. Come down to the next.
This one here?
See what it tried to get through the highs. Yeah. Once, twice, three times. Fourth time, smash through.
Yeah.
If you have a look at, let's go with 2016, October through here.
Yeah.
Tried to get through, couldn't.
1, 2,
2, 3, fourth go, bang.
Yeah. Yeah.
Look where we're at the moment.
1, 2.
1, 2, 3. So I'm looking for maybe one more leg down. And then if it's going to follow suit, and why wouldn't it? History repeats itself.
Yeah.
Why wouldn't it? If it's going to, be in that zone where it the fourth attempt it actually makes it, then I'm all on board with that. So
well, look at the level as well, mate. Look at this level. These closing highs here, closing highs here, closing highs here, comes and retrace to that particular point there, and it's started to take off again. So level looks good as well.
It does, but that's still a lower high until it's taken out.
Yeah.
For mine, anyway. So I'm yet to be convinced that now is the time to trade gold long. I want to see one more push down, fail to take out the low. So in other words, I'm looking for a higher low, and I think then I'd be happy to buy it. Probably around about the 1700 level, somewhere around there. That would be a good level for me.
Maybe this point here.
Yep.
Yeah.
That's about 1700, isn't it?
It is. Yeah, 1708. And these are futures as well, so the price is slightly different.
So I'm still a fan of. I'm still a fan if I see another game changer bar on Monday. I'll be shorting this again.
Like it.
But I can 100% concede that this is on the brink of smashing through those highs.
Yeah. Yeah, it does look like it, doesn't it? I mean, this is the interesting dynamic with gold, because of the contagion that we've had. If the Fed do pause with higher interest rates, that does suggest that the interest, inflation will stick around, which is a good environment for gold. Interest rates pausing and coming down would suggest that those yields would also drop. Again, a decent environment for gold. A fear right across the financial system because of contagion and the chance that we do actually get a collapse of something, whether it's the banking system or maybe even a country. Very, very good environment for gold. So things do point in the right direction for gold.
Thing is, we're not going to get a warning. I mean, this is the warning about a crash, a potential crash in the financial system yet again.
Yeah.
I don't think we have another one. If it is to happen, this will just disappear. The markets will disappear, and gold should just smash through that level. I would have thought. I don't know. Is it ready? Are we ready to take a position on that? Do you think? Can we get our Can we get our stops below the swing? And
I just wonder whether. I mean, it's a really difficult one because I think that there was an opportunity down here when it closed this gap. Here, where is it? When it closed this gap here, and it came down, this was the real chance there. And again, I took a position in this, but I cleared out really quickly, and I suppose this is the thing about the strategies is that sometimes your strategy really it can save you money, really. I mean, it's a risk off strategy really as much as anything else. But when things take off, my strategy doesn't determine that I stay with it. But this one was one and is one right now to stick with. But getting in now, I just don't think it's attractive enough, because even though this is this could well take off, how much are we talking? I mean, maybe silver, because at least you get a decent percentage return when this does go. But silver's been just that little bit stickier. But I until this really kind of like gets tested down here, I don't like these big emotional bars that don't retrace at all. There's a big space here that hasn't kind of come into, and I guess it's the same for gold as well.
But I mean, that chart looks very rangy and slash toppy to me. The silver chart.
Yeah. Silver does, yeah, it does.
That doesn't enthuse me to buy silver right now.
No, fair point, mate. Yeah, it's a tricky one.
I'm saying it can't go, but wow, in fact, that looks like a sell underneath. What's that? The daily? hourly.
This is the 1 hourly. Yeah, the daily is.
Wow, there's a slingshot sell underneath the last hourly.
Well, look at the
second
daily.
last. Wow.
Yeah.
Yeah.
Daily suggesting coming down, and it's a great. Really, I would suspect that that silver's a decent hedge for gold, because if gold is the safe haven for financial weakness, this would be an industrial metal. It would come into play as an industrial metal as well. So and there's another level that really this bar is way too strong without some I don't know. I wouldn't be that comfortable in this until this comes down and rests on this level and really sort of gives us that the higher low from here. I wouldn't really want to be buying this here.
Yeah, I agree. And I'd love to see it down below $19 because that'll bring the physical price of silver down to less than $1,000 a kilo here in Australia, which means I keep saying it. You can buy a chunk of it under the radar, which is cool. All right, Catherine is telling me that she traded oil overnight and got the lovely breakout to the downside.
Well done.
Phil's in. I don't know who let Phil in.
I just let him
in. Did I, Phil? Oh, I'm going to say I didn't do that. He just got in. He is a magic man.
Yeah, that was a good trade.
Yeah, look, I don't know why I didn't point this out on Monday. It was a pretty cool setup. If you go to the daily chart, the daily chart, been in a range for the longest time, and we came off the top with a game changer bar. If you put a trade line between, or you can go as high as you want if you like. There's a high in the middle of the chart, which is a reversal bar. It's got a green body, that one, yeah. If you start your trend line there and bring it down through the highs there, yep. Perfect false break.
Yeah, retest.
Yep. There's your entry bar right there. Last Friday's bar. And you got the lot. Beautiful. That's not what you traded though, Catherine, was it? What did you trade? Oh, you did. Awesome. Fantastic.
Yeah, that's a very, very good entry. And if you look at this in detail, and this is where sort of coming down the time frames is really the key to this. You look at this in detail. As soon as you see this, as you say, on Friday, when it comes down to Monday and you go down to the 4 hour, the 4 hours up here, and you get this bar here just as a little indication. Now you get another false break to the upside, which would have been tricky, but a move down. This looks like another potential entry here, which is still under that daily bar, just about, and you got your stops probably at the monthly pivot. So there's as you say, mate, there's a lot of opportunities here if you're reading the detail of the chart correctly. Like that.
Where was I? I wasn't watching, obviously.
No.
It happens. If they don't come up on an alert or a scanner, then it's pretty hard to go looking for them all the time. But that's a really good one. I like that. Where does that go?
Oh, hold on, I'm just going to plug my laptop in. It's just run out of juice.
All right, no problem. We had a point. So if you look at the, and you haven't got my chart, I know, but if you look at the measured move, and I'm not suggesting you do this, Catherine. This is entirely up to you where you get out. If you want to get out, maybe you don't want to get out. That takes us down to around about 61.30, as I've got it. So there could be a fair bit left in that. Good trade. Well done.
Do you want the chart? You want to have a look at that?
Sorry, who was that in the background?
Sorry, dude. Did you want the screen?
Yeah, okay. Righto. Let's do that. I've lost the control panel again for the 13th time. I hate Zoom. Oh, is this like YouTube? Do we get a fine for that?
No, I think you're all right, mate.
You sure?
Yeah, I think you sound.
Happy days. All right. What have we got? That's what I was saying, Catherine. And I got no idea how you measure your targets, but that long-term range that we just spoke about, if that is to be the measured move, you're looking down there somewhere, maybe a little bit higher. And it kind of makes sense. Yeah, it's a support level there, no question. So entirely up to you, of course. But it does look to be on the move, I've got to say. Does that tie in with fundamentals, though, Ash? We're talking about China. Wow. I keep hearing it on the news that we're going to war with China. What?
Oh, really?
Yeah. I keep hearing it. We've only got days or weeks before we're at war with China. I don't know where this is coming from, but there seems to be a build-up of, I don't know, Australia and China have been at loggerheads for ages from trade perspectives because of what the former Prime Minister said, apparently, and all the rest of it. But there is tension. There's definitely tension around. But isn't there always tension around with China and the States and now Australia and every other country? Australia's just signed a pact with the UK and the US.
Yes.
That probably doesn't even make news in the UK.
No, that is a big news. That's a big news, especially because of Brexit.
Especially because of Brexit.
Yeah, I mean, because you're talking about a trade pact.
No, they're purchasing. I'm not sure how the UK works with this, but Australia has just signed an order to purchase, I think it's 8 nuclear subs,
right?
As a part of a deal that's labelled AUKUS, AUKUS, right? So there's a whatever it is. Oh, I was going to say a menage a trois, but it's not quite that. But it's in that vicinity. There's a pact of 3, and it's something like, I don't know how many $billion, $380 billion or some bloody thing. But the interesting part to me is if I'm China, I'm saying, well, how dumb is Australia? Because this deal goes for something like 30 years. In 30 years' time, I would say if the world still exists, then nuclear submarines will be way, way, way in advance of what they are now, most definitely. Yet we'll be buying them still off America. And this is, historically, we've done this time and time again. We buy all this used stuff from America, right? All their the stuff you throw out and put into the op shops. That's us. That's Australia. They buy all of these things that America's used for 20 or 30 years, whilst America goes on to new technology. I think we're so stupid. I really think we're so stupid. But anyway, it is what it is. And that has been reacted to, if that's correct terminology, by China in a not very favourable manner. Now, whether this is all propaganda or news talk or whatever, I don't know. But it occurs to me, and I don't know if we see this quickly or it happens over time or if it's indeed correct, but if we see China actually flex their muscle against Australia, then that's not going to be good for the Aussie dollar.
Yeah.
So watch this space, I suppose.
Yeah. Yeah, no, I agreed, mate. There's a lot of tension, isn't there? I mean, it's really this has all been created by the situation in Russia and how certain regions have gone on one side and certain regions have gone on the other, and I wonder whether this is as much to do with what's the word? not consolidation, but camaraderie. I wonder if it's as much to do with camaraderie as it is to do with anything else. Basically saying, look, we have put our flag in the sand here on this side of the argument.
That's right.
Because it does appear that that China may well have put their flag in the ground on the other side of the argument.
Well, it's East versus West, isn't it? At the end of the day,
it is. Yeah, it is. It is. It does seem to have transpired that way. Yeah. So yeah, I mean, it's, you know, I guess, as you say, watch this space, but
yeah,
it
and
is
the reason I
time.
raise that point in terms of positioning yourself, I feel that gold, and you know, I hate to say this because I've been a technical bear on gold for the longest time, and still am until that lower high doesn't exist anymore. But in terms of positioning yourself, and that's why I asked you, where do you think, if you put your stops below the last swing low on gold, it wouldn't be such a bad idea, given that, you know, we're talking multiple thousands of dollars above where we are now. I'm not talking that, but you know, all the experts are saying that it's going way, way, way higher, and I'm prepared to believe it'll go higher, double its price maybe, those sorts of things. But we're in uncertain times, and the more uncertain times we are, the less likely it is that we're going to have stock market rallies. The more likely it is that we're going to have gold as a fashionable commodity, if you like. The more likely it is that we're going to have things like, and we spoke about this on Monday, things like the Swissy and the yen being very, very favourable in terms of currencies. Unfortunately, the Swissy copped a hiding yesterday on the back of that, on the Credit Suisse thing. I don't know if they're going to be bailed out and this contagion is not going to happen, then I think the Swiss is still a really, really good asset to have. And if that's the case, you're getting pretty good price as of yesterday, or because of yesterday, on the Swissy against just about every other currency. So it's tough to call, but in times of uncertainty, they're the sorts of things that traditionally you'd be looking for: your golds, your Swissies, your yens, US dollar to some degree, I suppose, as well. So I think I'm prepared to think macro at the moment, or longer term, than I am to think shorter term, because I think shorter term is going to be a little bit volatile and uncertain in the next little bit. I don't know, I might be wrong, but it seems to me that there's a little bit of uncertainty around about the place, and if that's the case, I'm a bear on stocks.
Yeah. Well, I think you're right, mate. I think, you know, when it comes down to this stuff, it's as much to do with the value of the asset as anything else. So the negativity that is surrounding stocks is you know, certainly evident. The question really comes in: does the negativity that we currently have justify the current price, or is, you know, or is there some value to be had? Because, you know, we know that every bull market starts with a flush of fear and negativity, and that's where the opportunity lies. You've seen what's happened to the Nasdaq. You know, people are sort of like starting to get on board with the Nasdaq because they're always asking, is this the bottom? If the situation that we've had, sort of like from Credit Suisse and from the Silicon Valley Bank, actually generates enough fear to push the market down into a position of value, what they're now then looking for is the next step actually for the central banks across the globe to help the stock market out, or is it to tighten the screw? You know, that's the conundrum really that investors will always have. And of course, they're going to get in when they think that it could be the last one. And I have to say, that's where the value is, because if you see the likes of gold, you know, when it did sort of like come down and close that gap as an example, or even oil, you know, what we're seeing with oil now, when you look at the price of oil now, the question for me isn't whether it can go lower. The question really is, what could potentially turn it back to the upside, because the value is now all the way in the opposite direction. We know the sort of like the contrarian trader really is somebody that's just looking for some value, and they're going to get it. They're going to get it, one time out of 5 maybe, and that's plenty. If you manage to kind of hold on to the position and let it actually turn. And that's really the question. It's not really so much whether you get a bit of upside, is it the turning point? Have we hit that turning point? Because if we have, then the upside is, on particularly oil, it's almost double the price. I mean, if we get to $100 a barrel from 68, it's not far off. It's okay.
Didn't we get to $120 a barrel from zero?
We did, yeah, exactly. I mean, that there was value there. There was definitely some value there.
Well,
but I think
mean, really, as a trader, how stupid were we not to just take a position at zero?
Yeah, and just hold on to it. Yeah, difficult one though. The only thing I would say, and I did actually buy shares in BP at the time, and that's the way I think I ended up expressing it, rather than trying to trade the oil contract itself, because you couldn't. Trading it would have been very difficult at that time, and I wonder whether you would have been burnt on swaps as you waited for it.
I don't know what your holding costs would be, though.
Yeah, and that's the problem, But if you could find a way to invest in it, where you are actually investing in it, then it was a great one. Again, my kind of mistake there was closing the position in BP when it kind of went up what I thought was a significant amount. It actually doubled in price, from where I was in. But I made the mistake of closing it out, and I've done the same with gold. I haven't actually bought gold. I've traded gold a little bit, but I haven't really bought gold. What I've ended up doing is buying mining stocks, and seeing if I can hold on to those. And I won't make the same mistake with BP. I think if it goes into profit, I'll just leave it, because actually the good thing about buying that stuff is that you get your dividend. So you can just sit on it as long as it doesn't come back down to where you bought it. You can put your stops at break even and just leave it alone and see if it can pay you some money.
Yep. My good mate Phil, who is in the room, is doing exactly the same thing, and I think it's a very good idea, to be honest. Oil's a bit of a worry to me because of the potential for conflict. That really mucks around with the oil price versus day-to-day living and day-to-day demand for oil. So I tend to be leaving oil alone. I think there's better ones than oil. In terms of currencies, I think, as I said before, I think the Swissy is probably, thanks to the Credit Suisse giving you a reasonable opportunity this week. I haven't had a look at the Swissy charts at all, to be fair, but CAD Swiss, which I've been trying to trade for weeks and actually lost last week on, shouldn't have, but I did, is now under question to me. We've broken out to the downside. You're on my charts, aren't you? You can see that.
Yep.
So we've broken that range to the downside, and now coming back to retest it. The thing I just don't concur with, if you like, is how on earth will we go lower here without good reason? And the reason for saying that is this is an all-time low. How can we go lower than that without good reason? There has to be, in my humble opinion, a bounce here. Maybe the Swiss, situation is such or so bad that this just takes off. I don't know, but how can that be? I don't get how the Swiss or Credit Suisse falling over can make this can make this go lower. It doesn't make sense at this very point in time.
Mate. I totally agree, and that's what we've seen with the Swissy, actually, haven't we? Because the Swissies really turned around in the last week, and Swiss, the Credit Suisse was yesterday's story. So I think that there's probably further to run. We did see some data from Switzerland as well, which showed some easing of inflation, as in the nation. Now, I thought we had some. What was the number we had today as well? There was a number today. Let me see if I can find it. I don't think it was a really important number per se, but we'll have a look. Oh yeah, economic forecasts, SECO economic forecast. It was the SECO economic forecast was the number, and that either yeah. So that's a report to be read. That's one to be read, and we can do that at some point. But yeah, I agree with you, mate. I totally agree with you. I think that there is all sorts of problems really now for the Swissy, because the Swiss National Bank have come out and said that they will effectively prop up the Credit Suisse, and that puts them under pressure.
Indeed, it does. And as I say, I cannot see how this in particular, because it is at these record lows, all-time lows, can't rally on the back of that. That said, I'm now in a conundrum where I think if that Credit Suisse thing does resolve itself in a short time frame, then the reverse applies, not necessarily against the CAD, but against other currency pairs, in particular the yen, which is a battle royal for supremacy in terms of the risk-off credibility, if you like. I'll put it that way, and that's what happened with the Credit Suisse thing, with Swissy versus the yen. But if this result, and short term, I think you've got to be looking short, right? But if it resolves itself very quickly, then I think the Swissy is working its way into a very, very bargain basement price at some stage. And I'm not saying now, because I think the only way you can look at the Swissy at the moment is to the downside. But time passes and this thing goes away. I'm not suggesting it will. I don't know if it will. I'm not predicting it will. But if it does, then I think I'll be turning my attention to the Swissy, given that we will maybe still be in a risk-off environment. I don't know that. It's just pure speculation. But if we are in a risk-off situation and this Credit Suisse thing goes away, I'm not suggesting it will, then I'll be looking to flip on the Swissy. But at the moment, I think, these pullbacks are absolutely gems for trading against the Swiss at the moment. And I think CAD Swiss is, dare I say it, yet another opportunity to go long here. And once again, if I get a setup, I'll be trying to do that. Catherine, yes, looking at CAD Swissy too. Glad you brought it up. Actually sold a small position this morning for a profit before daily pivot. Cool. Because it rose sharply the past few days, some technical indicators are suggesting a very temporary high. Okay, cool. Well, technically, when you look at that chart, that's exactly what you're seeing. You're seeing a resistance level, which in the last few months has been very, very strong. And it is the bottom of that range that you're retesting. So I can understand why you'd want to go short there from a technical perspective. From a fundamental point of view, I can't see how you'd possibly be thinking of going short here, frankly. And that's the way I see it. And I'm a technical trader, right? So what am I saying?
Well, do you know, interestingly, mate, if you're looking at that's on the daily, isn't it? If you're looking at the daily, there are also sort of, there could also be a technical argument to say that this has actually hit a genuine low, and there's a decent chance to start looking for buy signals, because actually, let's just have a look at this on a.
This is at an all-time low, not
so an all-time low, yeah. But the last 3 bars have totally wiped out. Nice. I mean, you know, call it a tower bottom, really, on the daily. Looking at that on the daily, it looks like a tower bottom. It's kind of it's taken out that yesterday's bar. Totally took out the previous red bar, and it closed right on the high. So it's really strong. It's a really strong bar straight away. And even though I agree with some temporary upside, is in maybe 24 hours, maybe 48 hours, where you do see a little bit of a pullback, I think we should be looking for opportunities long. And we're right in the buy zone. We're at the top of the buy zone, but we're right in the buy zone. I think from here right the way down to around about 0.6690 is the buy zone for the CAD Swiss, and until it breaks down that area, then I would be looking for longs. I think that, and this is back to where opportunity lies, because the opportunity here is to the upside, because that's where the room is. And now we've got a signal to say there are investors that are interested in this market, because yesterday's bar shows you that. And the fundamentals kind of, yes, they kind of triggered that, and it might well have been an emotive move, but we are looking now for some follow through, and it does suggest that there's structural issues potentially in Switzerland, which haven't really filtered through to Canada right now. So I think there's messaging, technically speaking, to say there may well be a chance to look for upside. It's not happened yet, and you have to go down to the shorter term timeframes. Quite like the hourly. The way the hourly looks, when you look at that, I mean, there's, you know, the bar hasn't formed yet, but it looks okay, doesn't it? There's a nice trend line that goes from the lows there on the 13th, and there's also the one back, mate. Yeah, I think that's well worth looking at. Trend line is there. There's a horizontal level as well, which is around about that there sort of, there's that area there is we're as I say, we're at the top of the buy zone. That down there is the bottom of the buy zone, but the bottom of the buy zone would be great. You see a signal there to buy it, i.e. a higher low on the hourly, then the daily can then take play, and I think that there's a really good opportunity to the upside on this one.
That's almost a buy limit there, mate, I reckon.
Yeah, you're right. Yeah. I totally agree. I mean, the only reason I think buy limits might be a bit dangerous right now is that we don't know what's going to happen next. It's an incredible market, really, that we're kind of facing at this stage. And you could well get taken in, and it might just tank. If Canada, or, let's say that, something in Canada all of a sudden comes out and says, we're needing to default. I think that if you look at the countries that are more exposed, though, to the financial sector, Switzerland's going to be one of them. UK is going to be another one. Canada less so, but we've seen what's happened to the price of oil over the last 24, 48 hours. So again, Canada's got its own sort of questions to answer as well. So that's the only reason I wouldn't really be that keen on limit orders.
Talk to me about this SH1T currency pair. Unbelievable. I'm short this. I'm short this dollar yen, right?
Yeah.
I'm short this, and blow me down. I should never trade this currency pair. Yet,
no, you don't like it, do you?
I hate it, but I'm getting everything telling me exactly the same as everything else, and I've got a beautiful double cross on the monthly pivot there. For those of you who don't know what I'm talking about, double cross means going short, going long, both decisive bars. They do have tails on them. And the double cross, because of it's a double cross of the monthly pivot, but it's also a double cross of the people who are going along here. That's the way I read that. So I'm sure, but it should have gone with this bar here. It didn't, and it's given me a double bottom now, and I'm just at entry level. I'm sick of it, and I'm thinking, oh, really, do I want to be in here? And then I look at Euro Yen, which we are in. It's exactly the same trade, right? It's a false break. Exactly the same as Catherine was talking about on oil. They're all the same trade. Resistance trade line, break, back underneath, retest. They're all the same. Everything is happening the same way. So I'm of the opinion that the market is pretty much binary at the moment. It's either this way or the other. And working that out, I think, will pay dividends. Working which way it is will pay dividends.
I agree, mate.
I think that's the thesis at the moment. You know, are we in a situation where the market's so uncertain that stocks are going to continue to fall? That's my thesis. Short term, I don't know. There'll be a correction on that, on the moves of the last few days, I'm sure, before it does go shorter, if I'm right. And that's why I'll be looking for those retracements. Gold, I still think it's got downside before it goes long. So they're my thoughts on what I'm looking for at the moment, I think.
Cool, buddy. Well, I better go because I've got we got a teacher strike today, mate. So you know, with
you got Molly.
It got Molly, yeah. So I had her yesterday. We went swimming. I went to the pier. Where else did I take? I took her for. Oh gosh, I mean, we had a day of it really. I took her swimming, and then after about half an hour, I didn't really want to go swimming, Daddy. Oh, all right. Should we go to the pier? Yeah, let's go to the pier. All right, went to the pier. Started playing the 2p slot machines. And then I wanted to ramp it up and go on an arcade. Fancy on an arcade? Nah. So I took her to a cafe. We sat there for we ordered our food, sat there for half an hour. The waitress comes out with somebody else's food, catches her foot in their bag that's under the table, slips over, tips the food all over my lap. And then when I was leaving, they tried to charge me for the stuff that I hadn't even received. So, I had a bit of a day of it yesterday. So I'm hoping
a wonderful day
yesterday. Oh, mate.
Fantastic.
I don't know what was going on.
I hope it's better today, mate.
Well, let's hope so too. Let's hope one of these trades works out. I have decided.
How's your trade going?
Well, the FTSE, I've decided to just to close it down. A relatively small loss on it, just a break even. Just because it hasn't really moved very much, and I've really, you know, this is the thing. When I look at this, let me just bring this up. When I look at this FTSE, you know, I'm buying up here and I'm looking for an explosive move to the upside. Well, then you get this. So to me, it was time to close it out. So when it pushed up, I didn't quite get back where I got in, but as it pushed back up again, I decided to close the position out. So I'm out of that one. But I'm leaving the Euro Aussie on. Decent bar, you know, so we had a decent 15-minute bar there. There's the hourly, so it's still looking weak enough. What I want to do is move stops, but I haven't got enough information to do that yet. I still think there could be some volatility. It looks like these stops are in the right place. So if it starts to fall, as I said before,
T minus 3 hours or something?
I don't know what it is, mate, but it's got to come down.
To the ECB.
Oh, I see. Sorry, ECV. I thought that was a move stop calculation.
No.
Where are we at? 13:15. So 4 hours 15 minutes.
Right. Okay. So you got 4 hours to get free trading. Cool.
That'd be great. Yeah, it's possible.
Yeah,
it's possible.
Yeah. Look, I'm pleased on free trading on 2 of them. So let's hope we get the right result.
Yeah. We'll give it a go.
We shall see.
All right. Have a great weekend to everybody. Obviously to you as well, mate. Thanks for being our trading buddies as always. We will see you on Monday when we'll do it all again and see if we can make some money out of these moves today.
You bet we will. Those of you who are in the gold breakout trade, I didn't give you a disclaimer at the head of that. Don't forget, it is in absolute test mode. So we're not suggesting that you put any meaningful cash on that. I'll just update it before we do say goodbye. And hasn't triggered yet, but we do have a long order at 19.25 with a take profit at 19.35. We've got a short order at 19.07 with a take profit at 18.88. So reasonable risk to reward on those breakouts. If one of them takes place, obviously cancel the other. And there's no TP1s. There's no stops. There's stops, but there's only one trade. It's entry, target, entry, target. One cancels the other. Do not trade it in both directions. You'll finish up in all sorts if that goes wrong. Again, euro yen, hanging on to that. I've got my stops and entry. This all depends on the ECB, frankly. Euro pound the same, is coming back rather aggressively. But even if, and I'll say this, even if the ECB statement doesn't take out this high, so in other words, it doesn't close above the trade line, I'll put another order short below that bar, providing that we don't take out yesterday's high. And dollar yen, wow, what do I do with dollar yen? I really don't know. I've just got to leave it there. I think the setup's still there. It's still valid, and we're just below entry at the moment. So I'd like to say we're in deep profit. We're in small profit. We'll see how it goes. One thing I would say, if we do close above the pivots, if we do get a close on the 4-hour chart above the pivots, I'll close the order because I'm wrong at that point, I believe. So close above here on the 4-hour chart will suggest that this double bottom is going to drive price back to the next or to the previous breakout level, which will be here, which will be my stop loss area. If it was up here, I'd probably feel a little bit more comfortable, but that's what I'll do. Hopefully it takes out those lows and kicks on and gives us a bit more money in the bank. That'll be good. Righto, that's me. I'm done. Thanks, Paul P. Thanks all. Thank you, Catherine, for your inputs. Ash, have a great weekend with Molly.
Thank you, mate.
Fairy floss day today.
Let's hope, mate. Let's hope. I hope it's better than yesterday. I really do.
Cheers,
I mean, I just hope
Taz.
she's not such a sourpuss. Everything I do, that was kind of going well, and she's like, oh, I'm not enjoying this. Like, come on.
How can she be, mate? You're such a cheerful person. I can't.
Well,
Sally must be a bitch. Oh,
there's a song in there somewhere.
Yeah, I'm sure there is. Have a good weekend, mate. And
See you soon.
thanks everyone for being our trading buddies. See you next week on Monday.